You probably didn't know this, but it's possible to turn every bill you pay into Bitcoin and Ethereum and still pay the bill. Today I'm going to show you how this is done. The problem is most of us make money and spend most of it. Maybe what's left over we invest. Most people don't even do that. But what rich people do is they put their money into assets and they borrow off those assets tax-free to buy the things they need. Why not do that as well if it's possible? Well, the problem is it wasn't possible till now. And I'm going to show you today how it's done using an app called Stackit.ai. And if you don't want to watch the full video and you want to just go straight to figure out how it's done, go to stackit.ai/guide, or there's a link in the description. So here's how you got to think about it. Every month you pay bills, but you don't pay a bill for your own financial freedom. But what if you could? What if you could just take a certain amount and deposit that and invest more than you deposited? Or what if you can take the amount you earn or you pay in bills, put a little bit more on top of that, and invest as much as you're paying and more in bills? I know it sounds a little confusing. It's not normal. Most people do not even know this is possible. But I'm telling you, already hundreds, if not thousands of people are doing it. So the way you start out is with what's called a 40% buffer. Jay-Z says if you can't buy it twice, you can't afford it. But what I say is if you got 40% more than it cost, you can not only buy it, but you can also buy Bitcoin and Ethereum. So here's how it works. If you deposit $700 and borrow $500, you're going to invest $700 and spend $500. So that's 40% more. By depositing the $700, that becomes your collateral. The $500 becomes your loan. And then you have $700 of Bitcoin and Ethereum against a loan of $500 US, gaining at an interest rate about 6-7%. Bitcoin Ethereum grows way more than that. And if it just continues to grow more than the interest rate on your loan, not only would you have more collateral than the loan, but your interest on that collateral growth will grow more than the interest on your loan, compounding more and more over time. And if you do this every month, over and over and over, for years and years, if not decades, there's almost no way you don't become a millionaire. Because if you think about it, compound interest on a little bit of money turns into a lot of money. But if you could put compound interest on more money, meaning how much you spend in bills, you can get there even faster. Because more money compounding turns into more money. And then as your buffer grows, which means your collateral and your loan start to create a distance, and what that is creating a net worth gain, which means you start to have a bigger and bigger net worth, your health score grows. And as your health score grows, you can borrow more money and you can deposit more and borrow more. You don't need to do 40% buffers anymore. When your health score reaches a certain number, you can deposit and borrow as much as you are bringing in. So if you bring in $5,000 a month, if you deposit $5,000 a month, you can borrow $5,000 a month, and now you're investing everything you have made. And now there's almost no way you don't get rich that way. And again, none of this is financial advice, but it's definitely possible to have people doing this with hundreds of thousands of dollars and millions. And what does this mean? This means you're using your money twice. You're using your money once to buy assets and twice to pay for your life. And over time, these assets should outpace the loans that you're taking. And eventually, if you want, you can pay off the loan. But because of decentralized finance and over-collateralized loans, you don't have to. So let me tell you some stories about some Stack users that have been using the app for over 2 years now. So one story is there was a person who was about to flip a real estate property, and they had to put money into the property. And every time they were putting money into the property, they were stacking it, adding 40%, 35%, 20%, depending on what they could do. So they needed to pay a carpenter $10,000. They would deposit 14, borrow 10. Look up, and that person had hundreds of thousands of dollars, and their property was built, and now they're making income from that property, and they have their assets. Another person was doing an Airbnb arbitrage business, and every month they got income, and they had to give the people who own the Airbnb properties money. So what they do, deposit the money, borrow to pay for their own expenses plus the people they were paying to rent the apartments from. And doing this for years, you could imagine 5, 6, 7,000 a month. If you take a compound interest calculator, you type in 7,000 a month, and even if you just put 15% per year gains, that becomes a lot of money. And yes, I understand. What if I don't have thousands or hundreds of thousands? I see people using this app with $100 a month, $50 a month, and just borrowing on 50, borrowing 125, on 100, borrowing 250, on 200, borrowing 500, meaning they're investing $700 a month, $350 a month. And now that starts to add up. And over time, your net worth starts to grow. You can do this with any amount of money, $10, $5, $50, $500. Whenever you get money and you think, all right, I'm about to spend money wisely or unwisely, you can figure out how much buffer you can afford, bring the money in, borrow, pay for what you got to pay for. Or if you know you want to invest and you want to invest more than you have, you could deposit a little bit, borrow more on top, and invest the full amount. And of course, many people ask this. This sounds good as prices are going up, but what about when prices are going down? When prices go down, what Stack does is it starts to sell some of your assets to protect that net worth, right? Because we want to grow your net worth. So if the prices start to fall, your net worth is going to start to shrink. But if we sell and buy back as the prices are falling, then you will grow your net worth over time. And the more you're consistent, the more that happens. So one of the main 3 things to avoid in making mistakes in stacking is not being consistent, because most people are not consistent. They buy every now and then, and when they buy is most likely when the prices are the highest. So if you're only putting in when the prices are the highest, and right after you put the money in the prices fall, it's not good. But if you're bringing in money consistently, whether the prices are high or low, you're always buying. And if you're buying more when the prices are low, when the prices go high, you make more money instead of putting money in only when it's the height. And then overborrowing is another big thing I see people do. So what that means is, if you start to see your net worth growing, instead of letting it continue to grow, you borrow more out of it, lowering your net worth. And that means you got less net worth to protect over time. And that's not good. You want to grow your net worth. So borrow as least you can to grow that net worth until you get to your goal that you can borrow. My goal is to borrow enough to live every year. I want to create a portfolio value so high that every year I could borrow how much I'm spending and keep letting everything I make compound. And then taking profits, right? Last bull run, many of us didn't do this. Prices were high. We were looking at portfolios and loving the number we saw, but we didn't take those profits. So now built into Stack is something called buffer protection, which means as that buffer grows, we are taking some of that profit to make sure you either pay down your loan or you have some of that gain even if prices fall off the cliff. And that is 3 things that we built this app to make sure people are not making those mistakes. So again, if you're interested in trying Stack or learning more about it, there's a link in the description, or you can go to stackit.ai/guide.